All right, this is a market review in the middle of the week because a lot of news has transpired and a lot of technical analysis has come to fruition. So on Wednesday, I took a losing trade, thinking that it should go down. Instead, the market kept pushing up, and I took a loss, a small loss, on Wednesday to just to test out the market. Here's the loss at $163 on Wednesday that I took. I was trying to go short from here. As this candle was forming, there was a divergence here. As this candle was forming, I think ES was forming higher high while the Nasdaq wasn't. Nonetheless, I didn't wait for the 10 o'clock candle to close. If this is going to be a divergence here, I wanted for that candle to close inside this candle's range. Once this inside candle range, then you can apply the CRT model saying that turtle souped should go to the middle and the opposite end of the range. Since we're in line with weekly and monthly order flow, the daily order flow should also be bearish. And the reason was the fact that we also had a bearish market coming into New York AM session. The only thing I didn't like about this trade was the fact that we had pushed down through the London session and then we rated this liquidity, right? So so I think this was the candle that I wanted to trade. So this candle went into the liquidity. There was a divergence here. So this candle. And then I entered on this candle because there was a divergence here. This candle it opened here. It failed to go above here, right? Where ES was going above here, forming some type of a divergence. So nonetheless, as you can see, I entered here. I put a sell position here, and I got stopped out here. Small loss. Nonetheless, I knew and I predicted the news was coming out on Wednesday, right? This was the tariff news that hit on Wednesday, right after market closure, the reciprocal tariffs plan by the federal government. All right, so that was the news release there. I saw as I was live watching this news, and right at 16 o'clock when the news hit, there's a little bit of lag time there. If you go down to a small time frame chart, you'll see that this drive up, this was actually 16 o'clock, nothing happened, right? So Trump started speaking. I think within a couple minutes of it, he said that we are going forward with the tariff, and this is when the market took off. The news event caused the market to drive up. Therefore, this was the manipulation here. We did not have any runs or stops, right? These were not really runs and stops here, right? Evidenced by the body, very tight range here, small body, and no large wicks, right? So there was no clear run on stops. So the news caused the manipulation here, going above the highs that were created in New York session. Full-blown tank there, and we all saw what happened. There was no divergence here. The news caused both markets to flush down. Now what happened after that? Okay, this is what we're interested in for today's Thursday and how I took this trade. So we had a huge market structure down. This is what it looks like on a 4-hour chart, right? Huge market creating this order block here, weekly order block, right? Run on stops. This is a high probability order block that we created here with that closure of that candle. On a daily chart, this is what it looks like. We have Monday, Tuesday high, Wednesday going into this order block here. This is the order block that were created previous week. Coming into that order block and showing trading away from it. And that's what it looks like on a daily chart. Now if you break down to a 1-hour chart there, again, news hit, same candle, basically just a news driven candle, so it looks the same on 4-hour, 1-hour, all throughout the chart. But the takeaway from this closure here on 4-hour chart is that this confirmed our bias of that the weekly is gonna most likely close lower, right? The 4-hour shift in the market structure, change in market structure, change in the state of delivery here confirmed that we are going to close, weekly candle is going to close bearish. Now coming into this market, I did the analysis already, right? So Monday we had this consolidation. Tuesday, I think there was a weekly opening gap as well, right? There's maybe not, maybe I didn't see that gap, but I'll come back to that gap later. But what transpired after that long drop, news-driven event, was the fact that if you look at on half-an-hour chart, so what do we do? We opened up Thursday, Asia session here, right? We went up to that gap, huge gap opening, right? We went up to the gap, we consolidated around it, all right? How does that look for ES? Well, ES also, if you look at ES, it looks like that we also went up to that gap, but we did not close in that gap, right? We did not close in that gap. Furthermore, we failed to go. We created a divergence. So again, if you look at it, this is the NASDAQ chart here. If you look at it with NES, we closed here, right? We opened way back here. So this is actually the gap, right? We failed to close in that gap. There's no closure there. Whereas NQ, this is the gap here. This is the gap. We opened here, right? We fully closed in that gap. Furthermore, if you look at this highs here, right? This is Asia. This is the London. It took the high, not by much, but nonetheless, it took the high. There's a divergence there. If you look at it again, this is London, Asia. So there was a divergence there. So market automatically pushed lower. Now going into the New York AM session, this is where Chris was tripped up, right? We had a chance to move up, yes. We did not create the divergence on the lows. That was the first cue that we weren't going to go higher. Okay, that was cue number one. Cue number two was the fact that when we opened, so London session, we created that order block there, right? I highlighted this order block going into the pre-market sessions there for my studies, is that we created this order block from 3 to, let's say, 4:30, right? So these up close candles created the order block. We had a change in state of delivery and then another drop right at 9 o'clock, right? 9 o'clock candle closure. This is 9 o'clock to 9, or sorry, this is the 8:30 to 9 o'clock closure here, right? So we further moved away from it, leaving these lows intact, right? So 9 o'clock to 9:30 opening, there is a manipulation. So where can that manipulation go? Well, since we had this divergence here, this could be our protected high. This could be our protected high, right? And we can leave that high and continue flushing. Now, if we're not coming back to the high, are there inefficiencies? Yes, there's inefficiency right here, right? Right there, that's one inefficiency. Right there, that's number two inefficiency. This is dead hour. 8 o'clock is a dead hour, right? 8:30 could be the manipulation, right? If we had manipulated and moved away, 9:30 could have been gone into another area of inefficiency post 8:30, right? But since this is 8 o'clock is a dead hour, 8:30 is the CME open, right? We went up to the inefficiency here from this to this. So time 9:30 opening inefficiency. Now, what does that look like? Okay, so candle number one. This is the 9 o'clock to 9:30 or 9:29. 9:29 to 9:30. This is what we went. I entered here, and then I took profit here. Obviously, the market went a lot further, not without a drawdown, right? So if you look at that on a 6-minute chart, so let's first highlight that. So if I'm looking to trade this is our candle that took liquidity, right? And we are looking to trade candle post liquidity, right? So that's what it looks like here. So 9:30 opening price, 6-minute candle. You can go into 5, 6, 9, whatever you like. I was flipping back and forth between a few candles here, and then obviously I stuck with 6-minute candle, right? Sorry, I entered off a 3-minute candle, I believe. So all right, so going into this, I had two options, right? Two options meaning I was looking at a few things. I knew by 9:30 we weren't gonna go up to fill in this void that we created. Okay, how did I know that? Well, because we created that order block. So I was looking at that order block from the London session, right? So one idea was that we close 9:30 closes, and then 10 o'clock we have that candle closure within this up close candle. So we have candle number 1, 2, 3, 4, right? Creating that swing high point there. Now, what is the swing high point here? This is the 9:30 creating the high, swing high, right? And then 10 o'clock closing below that high. So we created 1, 2, 3 candle here, right? So when I saw that, as it was happening, I flipped to 6-minute chart, and I saw that this candle, 9:30 candle to 9:36 candle, there's a divergence, right? If you look at it, there's a divergence there. Yes, right here, 9:30 to 9:36 candle, there's a divergence. So as this candle was forming, and as it was formed, I entered a position here, right at 9:36. What made me confident in this trade? again, the things that I talked about previously, creating that order block in London, and furthermore creating the divergence. We hadn't had a divergence in the short and the lows here. Therefore, we would have had to create a divergence on this highs. Well, we don't have to, but my trade would demand that we create a divergence on the high because we're looking to go short. We entered right at that candle, and I took profit here. How did I know how to take profit here, or why did I take profit here? Well, if you look at the manipulation here from this candle, if you measure out this candle, I believe, because look what happened in ES, right? This candle on 3-minute chart versus this. Okay, so you have did you see that? This was the down close candle, or doji, versus ES. This was up close candle, right? So the small little things there that hinted me that this was the candle changing the order block or changing the state of delivery, right? That was a change in the state of delivery there, and then I entered right as this candle finished forming, right? So again, on a 1-minute chart, as you can see, we had 1-minute chart 940, right? 940, we had a change in the state of delivery. I entered at 941. So this was a nice and clear, and if you look at that with ES, obviously, as you can see, 930, we had 940, we had a change in the state of delivery here. Look at the highs equal to lower highs versus NQ, we had higher high. So that was a divergence. That was the entry there. And I measured out this 1 minute because this is a lot more cleaner on 1-minute chart. That breaker that ICT talks about, and then you take profit right at 4. Right, I chose to measure this. I mean, I could have measured on a 3-minute chart, but as you can see, there's no clear manipulation here, right? I mean, you could have measured that candle. You would have 4 would have been here. If you measure the whole candle, 4 is down here, which would never been hit. So for me, 1 minute had a nice measurement out of it, and I was able to measure it based on this clear manipulation with the candle body closures, right? With the candle bodies, up close bodies, with the clear change in the state of delivery here, returning back into it, you could have entered. I did experience some drawdowns as these were going up. I was in the drawdowns, right? I had put my stop loss right at here. So with that being said, how would the risk to reward ratio play out? So I entered on that candle. I entered right at that candle close. So at the candle closure to up here, right, to 4, that's 1 to 2.43. That yielded about, in terms of points, or not points, in terms of points, 700, close to 700 points there, right? Or ticks, I should say, 700 ticks, which was one of the most amount of ticks I have ever captured trading the indices. So this was a very, very, very nice trade. I was very proud of myself that I've taken the trade this way. All right, so overall, how did this week play out? Overall, I ended up netting positive once I started the paper account. So obviously, I started the paper account with $2,500, positive $4.5 from back in February. So this was a break even for me. So far, this has been a break even. And what I wanted to point out was the fact that if you look at the weekly, how did the weekly play out? Weekly was a Wednesday reversal, right? We had a daily order block here. We had Monday, Tuesday push up. Wednesday, the news, pre-news, or news hit this area of liquidity, and we had a candle closure creating another area of order block, right? So we created another area of order block on Wednesday, and then Thursday and Friday, market pushed way, way lower. And we have created so far, last week, we had pushed down almost 12% last week. So overall, the market looks very bearish. And going into next week, so this is the beginning of the month, April month, so we can see that we have pushed a lot. We have almost pushed down, let's say, 22% down for the year. Overall, it was a bearish week. Overall, weekly was a Wednesday reversal. Where can we go into? That's something to determine, but I do have some levels here that I would like to look at. But so far, what I can see that we have a lot of small areas here on daily and as well as weekly. Weeklies are large, obviously. Weekly inefficiency is huge, imbalance here. We have another area of imbalance and a large wick here. So I would like to see how this next week trades, but for the last week, I was overall happy. I was able to analyze as the daily chart was forming, as the hourly chart was forming, and as the sessions were closing. So I was able to read the sessions and see what the weekly might do. One of the key takeaway that I learned last week, this is on a 4-hour chart. I noticed that once a 4-hour area is identified, so for example, this order block was created on Wednesday, you can most likely tell where the weekly candle will start to form, like how the weekly candle will start to form. So as you can see, the weekly candle opened here, or not here, Monday. So Monday, weekly candle open, pushed higher. This was the wick of that weekly candle. We created that order block on 4-hour chart. So this is telling us that on 4-hour, we have triggered some type of a reversal, and we would most likely close below here, right? So therefore, most likely, the weekly candle would close as a bearish candle. So weekly PD array formation can tell you which way the weekly candle will form. So this was something that was very important that I came to learn and figure out, and I noticed that this week.